Welcome to part 3 of the Baggott Bridge Partners webinar series, Keeping Your Tax Life Real. Part 3 is a session on the stimulus package for the current evolving 2020 landscape on coronavirus or COVID-19. With Australia and multiple countries heading into a global recession possibly larger than the 1930 Great Depression, we wanted to explore the tax and financial support measures recently introduced. These stimulus packages by far outweigh what was provided in the global financial crisis of 2008. We want to help, so there really is no need to pay for these kind of materials at all. There is significant material to cover, so please stay tuned in. We've decided not to outline extensive math-based examples for our webinar and stay with the easy summaries. If you require more guidance or a copy, please contact us because our YouTube webinars, phone calls, emails at Baggott Bridge Partners are free. You only pay once we produce tax returns or financials for you, the client. Our new COVID-19 price policy is $88 for all your individual tax returns regardless of work involved. We do note that everyone has been severely impacted, so tax time should not be costly. Thank you for listening to our coronavirus tax special webinar, which applies to the Australian taxation system. Let's list the important topical concepts that you may have some queries on. The first one is JobKeeper and Jobseeker. The second is welfare payment cash bonus. The third is wage subsidy for apprentices. The fourth is working from home tax deduction. The fifth is easy early release of superannuation. The sixth is reduction in minimum pension withdrawal requirements. The seventh is rent relief and moratorium on evictions. The eighth is cash flow boost. The ninth is instant asset write-off. The 10th is accelerated depreciation. The 11th is business loans. The 12th is payroll tax. And 13th is ATO assistance and support for businesses and individuals during this time. And the last but not least is bankruptcy and insolvency. So basically we'll start with the very first concept, and then we'll head into more explanations of the remaining concepts left for us to explore, so to speak. So let's start with JobKeeper and Jobseeker. Now, the very first one, JobKeeper and Jobseeker, this is a wage. The JobKeeper one is different to Jobseeker. It's not the same thing. JobKeeper is a wage subsidy paid by the government to the employer at $1,500 per fortnight. After this point, it is then paid to the employee. So it starts from the government, goes to the employer, then heads towards the employee. And this is before tax is even taken out, this $1,500, and this will occur over a 6-month time period. And basically, it's paid to both full-time and part-time employees, providing they are over 16 years old and that they are Australian citizens, and they happen to be employed as of 1st of March 2020. This is to encourage engagement with the employer, so that so they will be considered to be currently employed by their workplace even if they were temporarily stood down. So the connection really has to be present here. The employee in question cannot be permanently terminated. It's not the same thing. If the employee in question is permanently terminated, they're better off going for Jobseeker. That's really which is via Centrelink. So let's basically for the employer to qualify for JobKeeper, the business operations must have suffered a downturn of 30% or more. And of course, turnover has to be under $1 billion, which majority of Australian businesses out there would qualify for this in terms of the turnover. And the percentage downturn, I don't think that would be too hard for a lot of businesses either. But if turnover happens to be over $1 billion, the downturn suffering must have been at least 50%. So it's a little bit more. They must be registered their intent to receive, the JobKeeper. The employer has to register that to the ATO and report the eligible employees monthly via Single Touch Payroll, STP. The payments will start in May 2020, and of course superannuation is not required to be calculated on them. The other one is Jobseeker. Now this is, instead of being paid from the employer, this is paid from Centrelink. And it basically, the employee can't receive both JobKeeper and Jobseeker. It is one or the other. It's not, you can't get both at the same time. It's basically, Jobseeker is a fortnightly payment, very similar in that sense to JobKeeper, but the rates can vary depending on, but anywhere between $510 to $790 a fortnight. And it will vary on circumstances such as having dependent children, being single, partnered, widowed, etc. Basically, regular reporting to Centrelink is required for this payment. You must, with the Jobseeker, you must apply for at least 4 or 5 jobs a month. I believe the number used to be 20, but that has slightly altered during the pandemic. And the coronavirus supplement of $550 a fortnight is automatically applied on top. So let's just say the person only qualifies for $510, and this supplement will go directly on top, so the person won't just receive $510 a fortnight. They'll get $1,060 a fortnight, which is not far away from the one that you would have got with JobKeeper. So it's definitely comparable, and it's obviously good for workers who cannot, for some reason or another, they can't re-establish that connection with their employer. And but particularly with shop fronts being closed, completely shut down over Easter, this allowance is definitely a good alternative. The third one is the welfare cash bonus. Basically, it's for people that have already been on welfare in the past. So that would include people who have been, such as pensioners, family tax benefit recipients, New Start allowance, youth and carer allowances, Austudy, Upstudy, disability. Basically, they will receive 2 separate payments of $750. The first payment was made back in the end of March, 31st of March. The second will be made from around the 13th of July. So they just get like a little supplement on top of what they already receive as of now. Let's head into the next one, apprentice wage subsidy. Basically, that's paid by the government to provide 50% reimbursement of wages for apprentices employed as of the 1st of March 2020. The employer must be a small business with 20 or less full-time employees. The maximum claim is $21,000 per an apprentice. This basically exists for small business struggling to retain their trainees. There's a lot of factories and warehouses out there that will hire apprentices at various stages, and $21,000 is substantial. That's not a bad reimbursement, because apprentice wages are not high end in the first place. They're only just training and being introduced to the workforce. So it's definitely a good measure for those small businesses. The next one, which is probably quite popular, is working from home tax deduction. There's various millions of office workers working from home at the moment around Australia. So, and majority of those office workers are reluctant to travel to the office or the business shop front in question. And so basically numerous employees are working from home in a virtual environment in front of their own laptop/computer. The new home office rate is 80 cents per an hour for your home office, but it has to be, it's calculated on a reasonable basis dating from the 1st of March 2020 only up until 30th of June 2020. So this new rate doesn't continue on into the new financial year. But the difference with this rate compared to the old method, the new rate of 80 cents, it encompasses a lot more areas such as your internet, your mobile phone costs, your cleaning, your stationery, in addition to the usual heating, cooling and power bills. And receipts are basically not really required for this. So the old method is still available, because the old method might be more favourable if, for example, you did set up a more extensive home office arrangement during the COVID-19 situation. So you'll still use the 52 cents to claim your heating, cooling and power, but you might have, racked up significant mobile phone, internet and stationery bills and computer costs and home office furniture such as, chairs, desks, tables, etc. So, and bookshelves. So basically, you might have a bit more to claim under the old method if you decided to full kit out your home office scenario. Then basically, let's head into this is about the fifth measure, early release of superannuation. People can access up to $10,000 of their super in the 2020 year, and then a further $10,000 in the 2021 financial year. And the idea is that these amounts are tax-free and they won't affect the Centrelink payments being receipted. And it does include sole traders and casual workers who have had their income or hours reduced by 20% or more. It basically, to be eligible to get this, the individuals usually have to be unemployed, redundant, eligible for Jobseeker, the one we discussed before, and of course they can apply directly themselves through MyGov website after the Easter weekend. So they were able to do this, and what the ATO will do is they'll issue a release authority both to the person applying and to the super fund in question. This is basically for people that are in financial distress due to the coronavirus economic shutdown. The payment is being released on compassionate grounds. So normally, within normal circumstances, this has been compassionate grounds to release $10,000 of super has been around before. This is not something new, but they're allowing you to do it completely tax-free without any real tax consequences, if you like. But normally what compassionate grounds would consist of, and it would take account of things like home loan repayment so that you don't lose your home, medical treatment, medical disability, or palliative care of yourself or a dependent. The other circumstance would be the death or funeral of a dependent, like a family member, for example. So, but just please be mindful that taking out your super early does reduce your overall pension balance for that end resulting pension when you do actually decide to retire in the long run. So if you have a balance of $100,000 and you take out $10,000 in the 2020 year, you take out a further $10,000 in the 2021 year, that reduces your balance down to $80,000. But once you take compound interest into account, you may have a lower balance in the long run. You've got to remember that money's not going to be there to compound on. So just be mindful of that. But if you desperately need the money, that this is definitely not a bad measure that the government has put in place for people that are able to draw upon this. Now, the next one is the reduction in minimum pension. You might be wondering what that means. It's for people that have self-managed super funds. They're usually individuals with an account-based, an allocated, or a market-linked pension. That means, see, people on pensions like these have to draw down an actual minimum payment out of their pension to keep it running. And what the government's done is they've reduced it by 50%, meaning that you don't have to take out as much if you don't want to. So say, for example, the person had to take out $20,000 a year, regardless with, come high or low waters, right? Basically now, they can reduce that by 50%. So they don't have to take out $20,000 in the 2020 year and the 2021 financial year. They can take out $10,000 instead. That's pretty good. That's not bad at all for people who are pensioners in that situation with their self-managed super funds. Of course, the next item, which is definitely been talked about, rental relief and moratorium on evictions. This is basically to stop commercial and residential tenants from being evicted due to overdue rental arrears, if you like, as a direct result of the coronavirus financial economic shutdown. Most banks in general aren't providing 6-month mortgage relief for customers, but the customer has to request that help. They have to ring up the bank, and the interest on that mortgage will be capitalised back onto that loan. So the interest component doesn't completely vanish. And ultimately the idea is that leases will not be terminated for tenants who fail to pay rent during the COVID-19 restriction period. The next one is more business-based, the next incentive. It's called Cash Flow Boost. And there are 2 rounds of the Cash Flow Boost. A lot of people are talking to their tax advisors about this one. And it's with the minimum is basically $20,000 and the maximum being $100,000 for both rounds. There's 2 rounds of this Cash Flow Boost. These payments are tax-free to the employer or the business, and it's triggered when the March 20 quarterly to June 20 quarterly basis are lodged with the ATO. And they must have employed actual workers to turn around and receive this boost. And sales turnover, of course, has to be under $50 million for the business in question. The amount of the second boost is dependent on the amount given in the first boost. So I can't give you an exact number now, and of course, the business can be a small to medium business, a not-for-profit, or a charity to qualify for these the cash flow boost rounds. The next incentive is quite good. It's called the Instant Asset Write-Off. Again, another business incentive for employers. The Instant Asset Write-Off has been around for years, and traditionally the asset threshold to obtain this write-off used to be $30,000 for small business with under $50 million sales turnover. The new asset thresholds have significantly increased to $150,000 asset write-off for the business, and of course they can be under $500 million sales turnover. And this is just existing between 12th of March 2020 to 30th of June 2020. So basically this measure does not continue into the 2021 financial year. But the temporary incentive for this, it's huge. This could be a lifeline for some businesses. And bear in mind though, the asset must be purchased for a taxable purpose. It must have some level of relevance to the business. There are some assets that don't qualify, so always check first before buying. The write-off will be triggered when the business tax return is lodged with the ATO. The next item, just in case you had problems with the instant asset write-off and you had assets that didn't qualify, for example, the next item, which is quite good too, is called accelerated depreciation on assets. Basically businesses with a turnover of less than 500 million, the same turnover as before, can access this accelerated depreciation deduction for assets that simply don't qualify, but the asset must be new and ready and installed for use between the 12th of March 2020 to 30th of June 2021. This basic incentive does not apply to second-hand assets. The asset cannot have previously been claimed for depreciation in a prior year, for example. Always check with your tax advisor first if you're not certain. Just double check it. It's worth it. The next incentive, which is quite good for small business as well, is business loans. The federal government has underwritten up to $40 billion in loans for small business. Despite the record low interest rates that have been going on at the moment in the economy, getting a loan can be difficult for a small business. It's not as easy as you think. And these loans will be at a maximum size of $250,000. They'll be unsecured. They'll have a term of 3 years, but they will include a 6-month repayment holiday. And that's not bad. That's pretty good. So payroll tax, the next one coming up is, of course, in relation to state payroll tax and land tax. Now, we'll start with the first one, payroll tax. It does vary from state to state in Australia. There are slightly different rules for payroll tax around Australia, but we'll just address the Victorian system for now. But we're more than happy to explain the other states if someone was to call. That's quite okay. The Victorian payroll tax exemption for small and medium-sized business with a payroll of less than $3 million in total. The payroll tax paid that year to date will be refunded and waived for the June 2020 quarter, which is quite good. And also, in addition to that, July, August and September 2020 payroll tax lodgements can be deferred until the 1st of Jan 2021. This is an excellent measure for people that have massive payrolls on, for their small business. So it's quite a good measure, but they're also, all the businesses whose operations are directly affected by the prohibited activities list will also receive a 6-month waiver of payroll tax from April to September. Businesses need to directly apply for this waiver. It's not just given out for the sake of it. So you do need to apply for these various measures, as you're probably noticing. Now let's look at land tax. Landowners can defer their 2020 land tax payment if they have at least one non-residential property and, of course, taxable land holdings below $1 million. So it is possible to defer your land tax if that will help you out a little bit more. We're heading down to the last few measures left. So the last two, ATO assistance and support. You might be wondering that, like, when you ring the ATO, what happens here? Basically, your compliance obligations with the ATO are still important. So it is vital for you and your tax advisor to contact the ATO if you do need some assistance to manage tax debt. So, and basically, the ATO have been very empathetic to everyone finding it hard during the COVID-19 restrictions. So the support does include ability to vary PAYG instalments to zero for the March 20 quarter, a 6 month deferral for repayment of BAS debt, remission of general interest charges and fines for late lodgement since 23rd of Jan 2020, low interest charges on all tax debt, tax relief if your financial hardship is severe. Again, you need to talk to the ATO about this, but it's not a bad measure. It's pretty good. Let's head into the last one. It's bankruptcy and insolvency. Basically what it is you receive a temporary 6 month safety net put in place to protect individuals against bankruptcy proceedings being instigated between the 25th of March and 24th of September 2020. The minimum amount of debt required for a creditor to turn around and issue bankruptcy proceedings against any person will now increase from its current level $5,000 to $20,000. So it can't be just a small amount of debt. So if someone owes $7,000, for example, in the old, before this new measure came into place, you only had to have $5,000 of debt. Now it has to be $20,000. So this will apply just for 6 months. It's not forever, but as you're probably noticing with all these measures. Now let's head into insolvency for a company director. There's 6 month relief for these directors as well to not be subject to director's duty if the company debts cannot be paid on time. The safe harbour only applies to debt that is incurred in the ordinary course of business. So this doesn't apply to his personal expenses, for example. The expectation is that many companies will be temporarily insolvent as a result of the pandemic. The safe harbour enables directors to trade through the pandemic if there is an expectation that the company will become viable within 6 months. There are some free resources out there, and I know you're probably wondering what they are. From the www.treasury.com.au, this is a government website, there are accurate free PDF downloads with detail on the COVID-19 government initiatives available. In addition, I've also accessed some free internet webinars for you to watch from Tax and Super Australia plus Tax Banter. You're welcome to use those addresses and put them in your internet browser to view them. That might be something different out there. And of course, at Baggott Bridge Partners, we are happy to pre-quote a fixed price should you wish to engage our services. Thank you for listening to part 3 of our Corona Tax series. Baggott Bridge Partner is an accounting firm located in the Melbourne CBD. For the latest tax law updates, please follow us on Twitter. Should you have any questions at all, you're welcome to send us an email and we will endeavour to answer your query. The information in this webinar was accurate at the time of writing and considered to be general information only. Liability is limited by a scheme approved under professional standards legislation. Thank you.